What's up everyone, it's Caddy with MoneyVest. So in this video, I'll be sharing a brand new ETF that I started a new position in today. So I picked up just about 50 shares in this ETF. It's a brand new stock, or in other words, an ETF. And I'm planning to buy more as time goes on, and it's going to be my third experiment for the long term. Currently, we have two experiments going on right now that are doing really well. The first one I started 3 years ago in 2021 in VUG. It was actually towards the end of 2021 and beginning of 2022. It was actually the perfect time to get started with that experiment because the markets were at an all-time high, and the idea was that if I simply dollar cost average every single week a specific amount, whether it's $1,000, $500, $1,500, if I just consistently keep buying $1,000 worth of this ETF every single week. Of course, I've not been consistent. In other words, some weeks I've bought more, some weeks I've bought less, some weeks I haven't been able to buy depending on, again, my cash flow and the amount of money that I have. But overall, after dollar cost averaging for just about 2.5 years, the first ETF, VUG, performed really well, and it's now up over 25%. Just got over 423 shares with a $32,000 profit, unrealized profit on this position. The second one, of course, being SMH, also doing really well, up I think over 37, close to 40% on that ETF, and with very, very handsome profits. So this is going to be the third experiment that we are going to be starting. I started today, picked up 50 shares, and this is another Vanguard ETF for a very different perspective, for a very different objective as well. So hope you all enjoy this video and find it helpful. Again, if you do, please make sure that you drop a like and don't forget to subscribe to the channel. And if you'd like to follow along on this experiment, find out when I'm buying, how much I'm buying, link's going to be down below if you want to join our Discord. All of our trade alerts and ideas are shared over there as well. Currently, we're offering a 51% discount if you're interested in joining us. And the MoneyVest beta launch is also going to be happening on July 8th. And of course, you'll have access to the entire platform, including this over here, where you can pretty much look at our MoneyVest metrics, analyze stocks on an individual basis, as well as calculate the intrinsic value for individual stocks using discounted cash flow and discounted earnings multiple model. And of course, we're going to be adding a lot more features and functionality and tools over time as well. So again, link's going to be down below. You can lock in this special pricing forever at a huge discount. So we'd love to have you on board. So the ETF that I added today that I'm planning to buy more of as part of our third experiment is going to be ticker symbol VYM. And after analyzing a lot of other ETFs related to dividends specifically, the reason why I drilled down on this is because of three reasons. Number one, the issuer. There is absolutely nothing that compares to Vanguard when it comes to the ETF world. Vanguard is probably one of the most recognized, most reputable, and the most popular funds, or basically a company, right, issuer that has been issuing index funds and ETFs for a very, very long time. Number two, very, very low fees. So we're looking at an expense ratio of 0.06%, so incredibly low. So what does it come down to is really just if you've got $10,000 invested in this ETF, you're really going to be paying about $6 in fees every single year, which is incredibly low and one of the lowest, if not the lowest, in the industry. And the third reason is because even though it's got a somewhat lower yield on a 30-day SEC yield, it's got a 2.8%, even though it's considered a high dividend yield ETF, that's what it's called, it's got a nice blend of both growth and dividend yields. So it's not really specifically focused on, let's say, growth, where there's a lot of other ETFs that are very much growth focused that don't pay a lot of yield. But then there is other ETFs that focus on a lot of yield but does not grow all that much. SCHD being one of those examples where the yield is going to be a little bit higher compared to VYM, but the growth is little to none when compared to VYM. And because I believe that over the next, let's say, 10 years, the United States, the stock market in general, is going to offer more growth than it is on dividends, because there's another analysis being done in the past where we've talked about the S&P 500 companies where profit margins are kind of at around that 12.5% range. And in the future, it's possible that it starts to somewhat stabilize or even come down. And one of the biggest reasons why the companies are going to grow is based on multiple expansion, right? That's where we're going to see most of that growth come in, because if profits are going up, right, on the back of revenue growth, even though margins are same, a lot of that growth in the price, in the stock price, is going to come on the back of price to earnings multiple expansion. And that's why I wanted to, again, have a nice blend of both growth and dividends, and that's when this ETF comes into play. So you'll notice that this ETF seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields, and provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. Follows a passively managed full replication approach. And this right here is the performance of this ETF over the last 5 to 10 year period. You can see that VYM has generated a compounded annual growth rate of just over 9.6%. Since inception of 2006, it's returned just over 8.3% before taxes and fees. So again, a very, very solid return for this ETF. The benchmark, I believe, is being the S&P 500, but I'll have to double check, but 8.47%. So a little bit lower than compared to the S&P 500. But again, the dividend yield is really why I'm investing in this fund in the first place, because I do have, of course, a portfolio of individual stocks. I have a portfolio of options. I have a portfolio of ETFs related to growth, which is Vanguard and cybersecurity and Bitcoin and semiconductors. And now I needed something that's a little bit more stable, something that's more value oriented, something that I can invest in consistently, and it's going to be paying me cash flow every single month, every single quarter. And my eventual goal with this ETF would be to build, again, something that's very similar to VUG. So let's say $150, $200, $300, $400,000 invested into this ETF. So for example, if I have $500,000 invested into this fund, and that's paying me, let's say, 3% every single year, that's about $15,000 in passive income or cash flow or dividends that I'm able to generate from this ETF, while also generating that growth as its ETF increases in price, right? So in terms of value. So this is where it sits in terms of where it is, investment style and the market capitalization. It's large cap and it's more value oriented. Of course, VUG somewhat fits over here because it's a large cap and it's mostly growth. And then SZHD would be a little bit more towards this blend of large cap and maybe a blended sort of growth and value. But I really wanted something that's more value because prices are going up as well because of the companies that it has, and so is the dividend yield. Earnings growth rate of just about 9% for VYM, median market cap of 131 billion. So you can see that it's got some of the largest companies with 556 companies here. PE ratio is low because it's, again, value. ETF, it's got mostly value companies, 18.5 times, and price to book of 2.6, return on equity of 16.3%. And this right here are going to be the breakdown for the different industries that it's investing in. So starting with the largest is going to be industrials. Then we've got 12.6%. Financials is very, very large at over 20%, probably the biggest one. Then industrials. Then we've got sectors like healthcare, energy, technology. They're all in the 11 to 10% range. And then we got consumer staples also at 11.10, consumer discretionary at over 9.8, and we got utilities at 7%. And some of the lowest ones are going to be telecom at 4.1, and then basic materials at 2.3%. And then finally, these are some of the largest companies, of course, in the fund itself. We got JP Morgan Chase, Broadcom, which has been doing really well, ExxonMobil, we got Procter & Gamble, Johnson & Johnson, Home Depot, Merck, AbbVie, Walmart, Bank of America. So all blue chip, all big tech, not really big tech, but all blue chip and big large cap companies in the United States that are, again, very, very stable, very high profitable businesses with consistently growing dividends for these companies. So they, all of them, I think, make up close to 20% of the entire fund. So this is, going to be the entire chart for this ETF. So if you come over to VYM, you'll notice that, again, it does offer some pretty decent growth. So it's up over 81 basis points here on the day. So from back in April, it did, rally higher a little bit over 6-7% here. Then, of course, came down, consolidated sideways. And then we are looking at a 2.88%, just a little bit under 3% in terms of that dividend yield. And again, if you go back, you'll notice that since November of 2023, this ETF is up a nice 23-24% in the last sort of year. So this is, again, the one that I started the experiment on. Wanted to buy near close to all-time highs so that I can, again, do this experiment, consistently dollar cost average and buy a little bit more slowly and steadily and build it into a sizable position that again pays a nice dividend yield over time, which is going to turn into some nice passive income and cash flows while also participating in the rally that the markets are expected to see and for this to continue. So let me know your thoughts down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you want to access all the MoneyVest beta launch here. You can plot a lot of different metrics. You can analyze a lot of different things on the platform. And again, this is going to be all of our MoneyVest metrics, as well as the fundamental analysis for financial statements for individual companies, as well as analyst estimates. There's going to be a lot of really cool features added on over time as well. So link's going to be down below. As always, happy investing. I'll see you all in the next video.